Today, I want to take a closer look at four stocks that have taken quite a hit in the past few days, especially after reporting earnings. And I believe you, as an investor, might want to keep a closer eye on them. I know I personally am. And for those that are familiar, I'm usually focused in the semiconductor and AI space. And luckily, these four companies are hitting either the semiconductor industry or the AI industry in general. So just to not hold you hostage, the four stocks are going to be Micron Technology, Uber Technologies, Adobe, and Synopsys. We're going to look at things like growth opportunities. We can see here valuations on forward PE ratios, which don't seem that bad. I mean, the highest one we have here is Synopsys with a forward 1-year PE ratio of 30. We have some in the 20s or the low 20s, right? And we have Micron, which is in the single digits. So we're going to learn a lot in today's episode, but first, make sure to hit the thumbs up, make sure to hit the subscribe button, as this is going to be the best place you're going to find any semiconductor news in general for free. Check out the pinned comment for special offer at fool.com/Jose, and also check out my daily semiconductor newsletter, whatthechipHappened.com. Link is down below. All right, so let's get started.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned, we're going to look at four different companies. The first one I want to start off with is Micron Technology, and this is in the semiconductor space. We can see ticker MU. The past day, the stock was up a nice amount, roughly 4%. But we can see from its year-to-date high, the stock is down over 33%, sitting at a market cap of 114. I want to say I get a lot of comments like this about the semiconductor market, where people look at semiconductor companies in the trailing 12 months PE ratios, companies like Micron, which look pretty expensive at 147, or companies like AMD that are also pretty high in the 100 digits. But it's very important to understand that the semiconductor is very cyclical. And when looking at trailing 12 months, it might include part of the cycle that was on a downturn. So in my opinion, I think if you're looking at semiconductor companies, the worst thing you can do is look at trailing 12 months PE. You want to understand where you are in the cycle, and you want to understand where forward PE ratios are. Like I mentioned, for Micron Technology, is closer to 7.9 on a forward 1-year basis. So Micron, few things that investors would want to be bullish in. Right now, we're seeing this huge evolution into AI chips, especially chips made by companies like NVDA, right? Their H100, their H200, the upcoming Blackwell. And these AI chips need a special type of memory called HBM. And there's only 3 big players that can design HBM. The first player is SK Hynix, which is pretty much the leader. The second player is Micron Technology, which is really focusing in this space. And the third player is Samsung, which, based on reports online and kind of articles, it seems to be having a hard time with HBM technologies. So right now, it's pretty much a 2-player market, where the main player is SK Hynix, and the second player is, in my opinion, taking market share, which is this one, Micron Technology. The great thing is, it's not just NVIDIA making H100s. We've heard in different other companies that they're designing their own chips. We know Meta is designing their own AI accelerator. Microsoft is designing their own AI accelerators. Broadcom, Amazon, OpenAI, all these companies are designing their own AI chip, and they're all going to need a form of HBM. So right now, this is definitely going to be a supply-constrained market, which is going to allow companies like Micron to charge a higher price, to have higher margins. And another important thing is this type of HBM memory is going to reduce the supply of other general memory as well out there. So it's going to help contain a very supply important market, or kind of a supply control market for 2025. AI is also driving more memory needed in things like phones, like PCs, like automotive, as we're going to things like autonomous driving. So right now, the memory market is one that I personally don't like to invest in because it's very cyclical, but I do believe HBM is creating a great opportunity as this is expanding at such rapid levels. So the first one we can see is Micron, and like I mentioned, the stock is down roughly 33% from its year-to-date high. The stock is reporting earnings this week, so if you want to know the ins and outs of the earnings, make sure to hit the thumbs up, make sure to hit the subscribe button, as this is something I'm definitely going to cover. Now, would I buy at these levels? I mean, I'm actually torn. I definitely see a huge growth opportunity in HBM, but I am kind of putting my money in other baskets right now. But Micron is definitely a top on my watch list. I believe values right now are not crazy. I don't mind maybe waiting till after earnings to see if we might get maybe a little bit more of a sell-off. And if we do get a sell-off, I do believe this becomes a very attractive company in valuation. I think right now it's attractive, but after earnings, if it dumps, I already see the AI accelerator market growing at such rapid pace that I can see this one becoming even more attractive if it does dump. Now, the second company we have here is Adobe, and Adobe year to date, the stock is down roughly 20%. From its year to date high, the stock is actually down over 26%, right? And Adobe right now is a company that's doing a lot of creative solutions, and they're implementing artificial intelligence. They're designing their own models, or they're kind of fine-tuning their own models for image models, for video models. And Adobe is used by a boatload of creators for video editing, podcast editing, ad making, and the list goes on and on. So for them, using generative AI is a must-have, because if not, they're going to lose market share. And I believe Adobe is doing everything correctly. I mean, while this is not a crazy growth story because AI, so AI is not going to fuel huge revenue growth, but what it's going to do is going to make their products a lot better. They have plenty of data that makes it maybe better than some of the startups, and it's going to help them continue to hold a nice kind of lead in the space. We can see total revenue was up 11% year over year on the most recent quarter. Operating cash flow up 2.9 billion this most recent quarter. Almost, I want to say, is that actually close to 50% of operating cash flow is margins? That's pretty impressive in my opinion. They are adding new annual recurring revenue. So overall, generative AI is helping this company gain market share and gain even more users. So it's not going to be like a crazy growth story like NVIDIA, but we can see right now financially, it's definitely helping out the overall company. Now, if we look at forward PE ratios for Adobe, forward 1 year, it's looking at 20.2. So this is not for this current fiscal year, it's for the next fiscal year. And I think for a software company, that's not that expensive. I'm actually thinking of kind of entering a little bit more into the software market right now. And Adobe would be one of those plays that I would start off as maybe kind of a player that has already established itself, and then maybe start to look myself into maybe more growth stories in the software space, in the software creative market. If you have any, let me know in the comments below, as that would be very helpful. Now, the third company we're going to look at is another software play, and that is Synopsys. So Synopsys is sitting at $508 right now. Year to date, the stock is pretty much flat, but from its year to date high, the stock is down over 17%. The main reason is after earnings, guidance didn't meet expectations, so investors started to sell off. Now, for those that are not familiar with Synopsys, Synopsys has solutions. They are kind of like, if you know Autodesk, how it helps engineers kind of design buildings and bridges and products. Well, Synopsys helps companies design chips, right? It's the software, the EDA, that helps them design these chips, how the chips go. So companies like NVIDIA, companies like AMD end up using Synopsys to design their own AI chips. Very similar like Adobe, Synopsys is adding AI into its platform because they have tons and tons of data that can help speed up a lot of kind of like the manual process that used to be done before. The reason I'm excited about Synopsys is we are seeing everybody, not just semiconductor companies. We have big tech companies designing their own chip. And once you design one chip, you're going to design the next generation, the generation after that, and the generation after that. And with artificial intelligence, everything is becoming some form of chip. IoT, smart homes, right? We're expanding more into more and more technology. So things like robotics, all that is going to need chip designs, and all types of chip design. It's not just the brain, it's everything else that controls anything that goes on in electricity, in electronics, in digital signals, analog signals. So there's a lot of opportunity here. The growth rate for next fiscal year is expected to be somewhere between 10 to 11%. Again, I don't think this is a bad stock. If we look at forward PE ratios, it's at 29.66, but this market tends to be very expensive usually. And right now, Synopsys is looking attractive. So if you want to learn more, definitely check that one out. Now, the last one I want to do is one that I personally have only looked at kind of the bullish case. Again, these are not stocks that I'm saying are great buys right now. I think these are great valuations, and it's time to kind of look more at the bullish thesis to see if they are great investments. So first, are they sitting at good valuations? Now, second, do I enjoy the thesis behind them that would want me to invest? I know Micron, I know Synopsys, I kind of know Adobe, but Uber is looking pretty attractive. I mean, in forms of artificial intelligence, one of the big things is data, and Uber Technologies has a vast amount of data. So if they play their cards right, there can definitely be some strength in here with things like autonomous driving, and the list goes on and on. Obviously, heavy competition with Tesla right now is making a lot of investors scared. But at the end of the day, I don't believe this market will ever be a one-player market. I mean, even in the phone business, you have Apple Technologies and you have Android. In the PC, in CPU business, you have Intel and you have AMD. Even when one was weaker than the other, there was always competition. And I think in any market, it's always going to be like that. So if in autonomous driving, kind of ride-sharing, ride-hailing, and things like that, you're going to have Tesla do really well, I think there's obviously going to be a player out there that's going to be competing. And in forms of data, I think the only one that has kind of any form of data like that could also be Uber Technologies. And they have some partnerships, and obviously their partners could do really well. But year to date, the stock right now from its peak is down roughly 30%. Again, a lot of fear because of competition like Tesla. But outside of that, I mean, the company is doing pretty well. Revenues is growing, adjusted EBITDA is growing. The company is maintaining a nice free cash flow as well at the moment. So financially, this is not only a growth company, but is also a company that seems to be having healthy financials right now. So Uber is the one I probably know the least, and the one I'm the most excited to learn more about, because I believe the market is always I feel like the market, and I've seen it in the semiconductor space, always believes there's only going to be one winner. And when they believe that, all the money pours into that one winner. But at the end of the day, the market is very competitive. And no matter how far ahead you think there are, you're always going to have a second player, and they can also win. So those are the 4 stocks I think you might want to add to your watch list right now, that they've seen a nice sell-off. They have great growth opportunities. In forms of order, I think Adobe would be my number 1 choice. Synopsys would be my second choice. Micron would probably be my third choice. And Uber would be my 4th choice overall. Let me know your thoughts on the comments below. Take care, have a good day, and see you next time.